Hi, this is Kelly Wright at the Money Show in San Francisco. I'm with Thomas Grimes of Reaves Asset Management. You all have an ETF, and it's got maybe one of the easiest to remember symbols in the world. It's the Reaves Utilities ETF, correct?
Correct.
Symbol is UTES, Utes. So if you were in our business and you heard the term Utes, you know exactly what we're talking about. So
Utilities.
Absolutely. So world's going crazy. We've got a rampaging stock market. You may have heard that we've just hit a record for the longest bull market in history. It's been in the news a little bit. And that's really great and it's fun. It's interesting to talk about, but it doesn't put money in your pocket. But you guys do put money in people's pockets, okay? But there's a smart way to do it, and then maybe not such a smart way.
Yeah.
So why don't you help us out?
Sure. Kelly, our expertise is in the utility sector, as
Right.
you said. We also invest in oil stocks and communication stocks.
Okay.
But we've been coming to the Money Show the last 3 years to tell investors about our ETF, which is a 100% long-only fund that invests just in our best ideas in the utilities sector, a sector we've been researching for over 40 years.
So no options, no leverage,
No options.
just keeping it clean.
Plain vanilla. Do
Okay.
the research, do your homework, understand the companies, understand the environments they operate in, the demographics of where they operate, the regulatory environment, very important. The experts at our firm who follow these stocks day in and day out
Right.
have relationships in terms of following what's going on state by state, every regulatory environment, and it greatly varies. And that's where our investment advantage comes in,
It's a lot of
understanding
detail.
these differences. It is a lot of detail. Most other investors, including institutional investors, don't want to put the resources into it because utilities have been recently 3% of the market cap of the S&P 500.
Okay.
So it's very small. You could go back 30 years and they were almost 15% of the S&P 500.
Well, that probably has an awful lot to do with the fact that yields have been, declined from 1982 to summer of 2016.
Well,
so
that's utilities have actually performed very well in the bull market, literally that began in the early 1980s through today, long period of time. You've done very well. In the last 20 years, here's a shocking statistic. The last 10 years of this bull market, utilities have definitely lagged the broad market. They've made money, but they've not kept up. Obviously, no Facebook, no Amazon, no Google, no Microsoft.
yeah, no FANG.
Right.
No FANG, no sexy.
But
I got
incredibly, in the 20 years ended June 30th of this year, the S&P 500 Utilities Index has outperformed the S&P 500 Index.
You're right. If you would do that as a trivia question in a cocktail party, you'd stump everybody.
Yeah.
No one's going to pick
Yeah,
that.
and the reason is, of course, as everyone knows, there's been two major bear markets in the last 20 years.
Indeed.
And that's when utilities really shine. They hold up better when the market goes down or the market is flat.
It's the darndest thing. People need to have energy.
Yeah.
It doesn't matter. Who cares about Facebook and Amazon if the lights aren't on and you can't heat your water and you can't cook?
It does help to be a monopoly and to provide an essential service such as power.
There you go.
And if you think about utilities, what most people don't realize is they're growing their earnings, the good ones, as much as 5, 6, 7, 8% per year, and they're raising their dividend an equal amount, and they're already starting off yielding 3.5%. And you put that together, and you can get to a 10% total return.
7% growth that used to be what it was.
Right,
So,
right.
We'll have to get to that later, though,
Okay.
and we'll do that. So,
Yeah, that's great.
hey, this is Tom Grimes with Reaves Asset Management, joining me, Kelly Wright, at the Money Show in San Francisco.